To the consumer durable space, now channel checks suggest that weak sales and demand for room air conditioners amid the early monsoon and weak summer has hurt sentiment, especially compared to last year. So we have with us Thiagarajan, Managing Director at Blue Star, with us on the show. Thank you very much, sir, for joining in. Would it be fair to say that Q1, the room air conditioning market, RAC, could see a drop of 20-25% given the monsoons that we've seen, the fact that summer demand, consumer sentiment has been weak? Is a 20 to 25% decline for the industry or for your company a realistic assumption?
Good morning, Rima. Wonderful to talk to you this morning. This has been in the news for quite some time. From April onwards, there has been a monsoon and the temperatures did not go up at all. It's a weak summer. So prior to the end of the quarter itself, the industry has declared the degrowth over last year would be around 25%. Remember, last year was a bumper summer. It was more than 57% growth. Now that has been in the news, so nothing is going to change now. It's a quarter which was bad for room air conditioners, may not be that bad for commercial refrigeration products. Having said that, to take a CAGR, still it is holding up at 15% CAGR, and even after this weak summer. So if you are part of this industry, one will have to cope with these unfortunate seasons. That's perfectly fine.
So you're saying a 35% drop for the industry in Q1 for room air conditioners? Did I get that right?
My estimate is the industry should have grown by around 25%. Blue Star also, I have been stating this for the past 2-3 months that it is so. And I have also stated one more thing. Whenever the summer season is weak, the festival season and the subsequent Q4 always have done well. And, I have plotted all the weak summers in the past. Eventually, some 10 to 15% growth is really possible. It should happen.
Okay, so 25% lower for Q1, but for the full year, 10 to 15% should stay intact.
Yeah, I am maintaining that. This has been.
You're maintaining your full year guidance. Got that.
Yeah.
Okay. Sir, so, the other issue was this whole compressor issue. That was something that was hurting the industry till a couple of months back. That has resolved itself completely now?
I would say provisionally, because there was an extension that was given. This is a non-tariff barrier. So let us get the big picture right. There is a PLI, component ecosystem is coming up, and for compressors, the facilities are coming up. And I think by 2028, India should be self-reliant on compressors. In the meanwhile, the extensions are being given. It's sometimes 6 months, sometime 1 year. So at least at this point of time, there is respite still around June 2026, and industry will have to work together to ensure that we become self-reliant. I think by 2028 it should happen.
Hi sir, good morning. Good to see you again. You're sounding optimistic about the next few months, though the start to the year has been quite soft. You had pushed through a price increase in line with what the industry as well had done. What is the trend in terms of pricing from here on?
See, whenever the summer season is weak, so one would like to clear out the stock. Stocks are not at abnormal levels, but one will have to clear out the stock. And remember, there is going to be an energy label change that's coming up on 31st December 2025. And so there will be huge sale of old energy label products, and moving into 2026 there will be demand for new energy label products. The consumers will behave both way. Someone would like to buy today's 5-star, somebody would like to buy tomorrow's 5-star. So the festival season is going to be exciting. At this point of time, I don't think there is a huge price drop that is happening. But I can imagine whenever there is a weak summer, you will not have opportunity to improve the margins. I don't think so. So next 3 years, Nigel, we talked about it. It's like the Duckworth-Lewis method. So you don't know really whether to score runs or hold on to the wickets, and that's how it is. We will do so.
It's been actually a good start to the test match. I hope so, that our boys can pull it through. We put up more than 300 runs on day one, and it seems, hopefully we'll have this covered. That said, getting back to business, your market share has been gradually improving, and you've outgrown the industry. Could you give us the targets for the next few years, Mr. Thiagarajan? Where do you see your market share headed?
No, as we have declared that our immediate goal is 15%. We were somewhere near 14%, and that is something which we could not do it last year. I think we will persist with that. The strategy behind that will be to have products at all price points and to differentiate ourselves through exceptional customer experience. The consumer expectations are also changing. They are used to now quick commerce, so they would like the air conditioner to be delivered the same day, installed the same day. The service level expectations are going up, so we continue to invest in these areas so that we are a differentiated player and we have the products at all price points and continue to expand the distribution network. I think we will be able to get to 15% or closer to 15% at least by end of this financial year.
Sir, considering that Q1 has been a bit of a washout, what will this do to your margins? I think you're guided for about 8.5% in terms of EBITDA margins. Will you be able to manage that in Q1? And for the full year, what are the raw material trends that you expect?
Our policy has been clear that if there is a raw material price increase or input cost, we'll pass it on to the consumers. We will roll it back if it is coming down. I do not see a major problem in margin management rest of the quarter. The Q1, of course, was always known that you are planning for 25-30%. When that didn't happen, right from April, May, we have been declaring that this quarter will be a quarter which is disappointing. I won't call it washout. The degrowth is compared with the previous year, which was a bumper year. So if you are to be taking average of the 2 previous years, still it would have been a flat growth. So there is nothing to worry about that. So it is just that your expectations were high based on the IMD forecast. Therefore, one is disappointed. That's about all. So the industry has been playing responsibly, is my view. And let's say, what are we talking about? We are talking about 8 to 8.5% operating margin on a full year basis, whether this category can deliver. I continue to maintain that it will be possible.
That. Just a quick word on commercial AC, CAC as you call it. What's been the growth in Q1? Because data center demand is really fueling, growth in this category for you. So what is your revenue contribution from commercial ACs? What is it growing at? And give us some projections, say in the next 2 or 3 years, what could that number look like?
I will not be able to talk specifically about Q1 because we are on a silent period that till the results are declared. But commercial refrigeration has the potential to become another room air conditioner category for the simple reason the penetrations are very, very poor. The growth projections are at a CAGR of around 25%. And Blue Star is a leader. We are present in every part of this segment, whether it is deep freezers or bottle coolers or cold chain, and we are not present only in the transport refrigeration part of it. But unfortunately, the market size is very small. It is less than 5,000 crores, and I would expect this to triple by 2030.
Yeah.
And driven by consumption of frozen food. Right now, the growth is driven by also the quick commerce delivery platforms. A lot of cold storages are set up by them. And the pharmaceutical industry is expanding. And most importantly, the traditional retail or what we call as Kirana stores, they are modernizing.
Correct.
It's an exciting part of business for us.
Sure. So commercial refrigeration, that's a segment to watch. Sir, very quickly before we let you go today, could you just tell us, with Q1 being as lackluster as it was, What are your inventory levels now? How do they compare with average inventory levels? And also, roughly speaking, what is the utilization rate at which your plants would be operating?
No, again, much before the end of the quarter, I have disclosed this to you and the financial press. The productions were cut down by 25 to 30%, depending on the SKUs. And because manufacturing is happening locally, I do not think finished goods inventory is an issue at all. One will have to look at the dealer inventory, whether they all, if you recollect in March, they purchased for the rest of the quarter, and they are also diluting it. And I don't think inventory is a major issue. Perhaps, 2 to 3 weeks more inventory maybe in the system, that is perfectly fine. And the good thing that has happened is with the local manufacturing, you do not have this issue. Earlier, prior to 2021, containers of air conditioners would have reached India, and you will struggle for 6 months till the onset of festival season to liquidate. That's not the case anymore in the industry.
And sir, the capacity utilization at present?
Going forward, forget Q1. Going forward, it will be on an annualized basis. We are running tight. We will be close to around 100% because our expansions are happening modular depending on the demand.
Okay. All right. Got that. Good to know, and lots of details over there. Thank you, as always, for joining in and giving us some perspective on how things are shaping up now that Q1 is over. That's Blue Star.